All right, I think we're on. Participants coming online, Rachel.
Checking on that.
Good morning, guys. Marcus Dillon here with Dillon CPA'S, joined by Rachel Dillon as well. Just wanted to kind of update y'all on some interesting, fun news in the accounting world, banking world, small business world as far as the PPP is concerned. Loan application forgiveness aspect has dropped. That happened last week, Friday. So if you've been following along with the webinars and kind of our guidance, happy to kind of have this one today and kind of give you some initial thoughts on where we're at, what we see happening, and go from there. So Rachel, I guess before we jump in, let me go ahead and go to the poll, the first poll that you're going to do today. Let me go ahead and
So as we get everybody kind of logged in and situated, I know people are still signing in as we're talking. And so we're going to start off with a poll regarding Memorial Day, since that's coming up. We actually do have a holiday during this quarantine time. And just wanted to check in with you guys while you're getting situated. How are you celebrating the holiday weekend? Are you staying nearby with a few close family members and friends? Are you traveling within the state, still quarantining and celebrating at home? Are you working or reading up on PPP loan forgiveness?
Yeah, I feel really sorry for whoever's spending their Memorial Day weekend reading up on PPP loan forgiveness.
So our goal with this webinar today is really to eliminate that desire or that need to spend your holiday weekend that way.
Thankfully, maybe we won't be doing that. Put the out office on, take a little breath. That'll be our intention for this weekend. So looking forward to it. All right, I'm going to stop the poll, Rachel, and then you can share those results.
All right, so it looks like everybody or majority of people are spending nearby, but with some family members and friends, so that's good. And a few of us are still quarantining as well, celebrating at home. So I think it probably looks maybe different than it has in years past, but I still know that no matter how you choose to celebrate, it'll still be a good time.
Yep, good time, good weekend. So
except for that one, reading up on PPP loan forgiveness.
Maybe at the end of this, they'll know. Stuff's going to change anyway, guys. So that's the fun in all this. You got to remain flexible, and it's all going to change tomorrow, next week, in a month from now. So who knows? All right, I'm going to go ahead and stop sharing the results, and then we'll go from here. All right, so kicking off, the loan forgiveness application dropped last Friday. It's on the SBA website. You can also go look at it on our website. We'll kind of dive deep here into some aspects. Also go into some Q&A, like common questions that we've seen across how we're staying informed, how we're staying educated, and then open it up for any questions at the end. We just do the numbers. I don't know. I think who knows if we'll have the right answer. But if you've got questions throughout, definitely ask those. Rachel's keeping up to date with Q&A, and we'll go from there. So the forgiveness application is 11 pages, fun stuff. So first couple pages, or actually the application is 2. There's a Schedule A, which is really important for the payroll cost. And then there's a Schedule A worksheet, which is even more important for the payroll cost. So you almost have to prepare it backwards. So worksheet, schedule, and then the actual application. Some additional guidance on documents we'll jump into, and then borrower demographics. They want to know who's filling it out. They'll ask you, the common questions like a census would. So just be prepared for that if you haven't already downloaded and looked at it. Go to our website. This is a copy of the application here as well. So you can see fun, legal jargon, bank info form. You wouldn't expect any other way. Thankfully for the most of you that are dealing with banks in the 21st century, this will be done online. We see that emails are already coming from most banks that here's the application, but be prepared, you're going to do this all through your online portal, just like you originally applied for the loan. Some of the smaller community banks may have you fill this out in a PDF and send it in with all the documentation. Just not quite sure what that looks like. The banks don't know, I'm assuming either. So, but that's what it looks like. We'll dig in and kind of share some more with you in a little bit. But first off, talking about a really big point. So alternative covered period was introduced in the forgiveness kind of application in detail. And what this speaks into is really the pay periods, the pay dates that are in this range. So much like a lot of our guidance, we were held up on incurred language. The payroll was incurred during, or if it was paid during. So they come out and give you an alternative covered period in addition to the regular covered period. So right there, you can see that borrowers with a biweekly payroll or more frequent, so if you're a weekly payroll, you actually have the option to opt into this alternative payroll covered period, which we think is going to be the most beneficial for biweekly or weekly potentially. We'll get into that a little bit later. But man, you know, I think if y'all are clients of ours, and especially payroll clients, we kind of preach the biweekly goodness as far as our preferred method. So if you're biweekly, hey, star in your court, you went out over semi-monthly or monthly in this because you have another option. So, but with that, we think that given the language as it is today, and we'll get in this a little bit later, if you're a biweekly payroll, you could almost cram in 10 weeks of payroll into your forgiveness calculation, which is more than what we were thinking. Hopefully it stands. Hopefully they don't rewrite the rules on this or clarify it in some way. I checked as of 12:55, there is no additional FAQ or interim final rule that clarifies what we're saying today. But that's the way we read it. That's the way that guys much smarter than us read it, who teach on accounting and forms. And so really our job is to kind of, I guess, be the interpreter of that accounting data or those accounting lecturers and translate it for you and see how we go from here. So the alternative covered period, that's pretty key. And I think we'll get into that a little bit later. FTE calculations is also clarified in the instructions and the form itself. So a lot of accountants, including us, were wrong on the 30-hour rule. It's actually 40. So 40 hours equals full-time equivalent, which, duh. I mean, you know, that's what we all thought, like that's full-time in most people's minds. So we were looking at an old ACA kind of adherence to what the guidance was there. So really nice that they've come out and kind of said 40 hours equals full time. There's also this new simplified calculation of what an FTE is. So full-time equivalent is 40 hours. That equals one person. So even if they work beyond 40 hours, they're still counted as one. If you have anyone, as far as the simplified calculation, that works less than 40 hours, even 38, they could count as 0.5. Or you could actually calculate it out divided by 40 to come up with your FTE. So at least we now know where the FTE definition is as far as the SBA is concerned, their guidance on it. So, but that's nice. And so we'll dive into that a little bit deeper as well. And then the other thing is the safe harbors. So these two safe harbors came out as far as FTE is concerned and the potential reduction of the overall loan forgiveness. So the FTE reduction safe harbor, as you see there, as long as the borrower, the business, puts back into place the same FTE headcount on June 30th that they did in those two different scenarios, you could build up to that over the 8 weeks. You know, I guess most people got funded probably April. If you got funded in May, it's really critical to, at least right now, calculate your FTEs there's not a easy way to do that other than per employee is what we've seen. And so we'll get into that with the Schedule A worksheet in a little bit too, and that'll help you do it. Unfortunately, there's no report to pull out ADP or payroll systems as far as we're seeing at this point. So if you want to know your FTE, which we're highly recommending, go ahead and calculating that so you know who to rehire over the next few weeks leading up to June 30th potentially. Go ahead and calculating that now. So the other thing that they kind of clarified, and this is great, are some FTE exceptions. So we saw that you may have an employee who's on unemployment and they make a lot of money right now on unemployment, maybe compared to what they would be working for you, and they want to stay on unemployment and essentially turn you down for your offer to come back to work. Obviously make sure that that's written, documented, probably signed by both the employer and the employee in that sense, just because it's going to have to be turned over potentially as part of this calculation. So that's the first one. The second one is, let's say that you had an employee who was stealing toilet paper, or something actually came up where you fired them for cause. They voluntarily resigned or just requested and agreed to a reduction in hours. With this clarification, they're not holding that against you either in your FTE calculation. So with all of that, same thing, great HR policies are what you need to stick to, making sure it's well documented, signed by both the employer and the employee if possible, to obviously support your case in the FTE calculation overall. And then the other thing is what we've kind of known from the beginning, it does not have to be the same employees. You can have different employees, not really any particular person to get back up to that number. So that's what we know as far as that's concerned. Rachel, you want to kind of launch this next poll and see where people are at FTE wise?
Yeah, so I know Marcus is talking a little bit about FTEs and want to see where our participants who are in our webinar stand. So are your FTEs the same as when you applied for the loan? So your choices are yes, no, but the difference is allowable for forgiveness based on those exceptions that they've given. No, and it will impact my forgiveness. Or what is an FTE?
So we'll give folks a little bit more time to answer that question. You got to love acronyms, right? FTE, CARES, CARES, PPP, PPT. I mean, it's just, I think I wake up just thinking about acronyms. And so FTE is one that will probably be burned in my mind for a long time. The same with PPP. If any of y'all are in the accounting space, hopefully we can all recover from this over the next few months, years, and forget about it all. So I'm going to end the polling, Rachel, if you want to share results.
All right, so it looks like majority, 43% are yes, FTEs are the same, so that's good. I think it makes it easier for you, just a little more simplified. The ones who said no, but is allowable, that's great. Hopefully those exceptions help you out. No, it will impact my forgiveness, which is okay. And then what is an FTE? A full-time equivalent is what we need to make sure that we're meeting as one of the requirements for forgiveness application.
All right, I think I clicked back for some reason. I'm gonna stop the share results and then we'll get back on with the presentation. All right, where are we at? All right, we're at the poll. All right, so just backing up, they've kind of also, in the application instructions, they've also defined kind of what we already knew. A lot of the summary, so the summary of eligible costs, this is on the payroll side. As you can read there, it's really payroll costs paid and incurred. And that's where, if you take anything away from today, as it stands today, that paid and incurred is pretty, it's good, hopefully, if it stands. So what that means is if your funds dropped and then you had a paid date the very next time, that's considered paid. And that's for pay that maybe applied to a range prior to funding, which now falls within the defined covered period. So paid is critical there and would be included. And so we're paying attention to that because we seem a little bit hopeful that that is the case. And that could obviously get you to full forgiveness a little bit easier. The other side is incurred. So like an accrual kind of accounting, if you will, for the pay range, all the way up through that final pay date. So you may actually have to prorate your final payroll, how much fell into as far as the accrued piece. And all the calculators that we assume that are coming out will support that. Obviously, our team is staying up to date on this as well, and we're really hopeful that the paid and incurred sticks, and they don't limit it to just 8 weeks. So the main thing is, with now the alternative covered period and being able to potentially cram, so to speak, the payroll into paid and incurred, that leads to a potential 10 weeks if you're that alternative covered period. If you're semi-monthly or monthly, it's a little more than 8 weeks, we would assume, just depending on when your pay dates fall. Obviously, we can help kind of clarify that for your exact situation if you are kind of a client under our care in that sense. But that's great news as far as what we're seeing. Still, we know about the $100,000 cap that's prorated to a maximum salary of $15,385 per any one employee, including owner officer in the forgiveness application. And then what was the final one? Oh, IFR, the internal final rule. It's kind of referencing that, but that will continue. We assume another IFR will come out on application forgiveness. So kind of looking ahead to the actual non-payroll cost, there is no alternative covered period here. It actually is the covered period, the 8 weeks of paid and incurred. So let's say that you did pay your rent or utilities within the 8 weeks, that would go to your forgiveness application. And then the same with if you incurred rent, but then it had not been paid until after the 8 weeks. Right now, the position is that could also be included. So I think we're giving them the benefit of the doubt right now. Hopefully they don't take away that benefit to where it's a little bit more of a benefit than just truly 56 days. 56 days is just that window as far as being paid or incurred. And so with that, we hope that payroll is still the primary reason for the loan. It's the reason that we even have funding in this case, since the loan application was based on payroll numbers. But if you can use up to roughly 20% of that loan balance for non-payroll costs, then potentially you get maximum forgiveness. And so I think the main thing is to look at the dates that you have been funded, continue to look at your cycle as far as maybe your rent or your utilities, have a good system in place as far as documentation, how you're saving invoices and copies of checks that clear the bank or credit cards. And so that's what will be needed as far as in the documentation stage. Whenever you look at documents to submit, and this is actually documents that will go with your forgiveness application. This is no surprise to us. It's the bank account statements. So for folks that set up a new bank account, hopefully that's a little bit cleaner, just to send that with the application, the forgiveness application. You're also going to attach third-party payroll reports if you use ADP, Paychex, Gusto, whoever, QuickBooks Online, QuickBooks, that you'll submit some of that application with your application as well. And then also the actual tax filings that support those pay periods. So like 941 for Q2 would definitely be included. Potentially even Q1 941, depending on a look back period, and maybe even Q3 depending on when you were funded. So be prepared for that. Go ahead whenever those reports become available, make sure that you've also saved those in your documentation to turn those over. And then also just all the receipts, canceled checks, all that fun stuff. So like we said from the very beginning, take this as, like it's audited, and this is what's actually going to the bank as far as payroll is concerned. On the non-payroll side, they're going to be looking at copy of lender statements, loan agreements, things like that, canceled checks that are all into account of what fell within that period. And as far as you have a signed lease agreement or a rental agreement, I don't know if I covered it. I probably didn't. I kind of blew right over the non-payroll cost. Right now, we still don't know the language in all of this as far as the mortgage interest. When you think mortgage, you think real estate. They have not clarified personal, like interest on personal property. They even mention it in some places. Myself and other people that have been following this very closely, we're real apprehensive to say it does include interest on property, plant, and equipment, just because we kind of want to go into this giving the worst case scenario advice. So we do spend most of the funds on payroll. But there is a glimmer of hope that if you do have interest being paid on equipment, if you do lease a vehicle or vehicles as part of your business, that those could be included. We can't say with 100% confidence right now that they will be. And so I would continue just to use the majority of the loan for payroll. If that were in our situation, if that were my advice, obviously. And then also kind of finishing up, what documents to keep. So 6 years is what the SBA ultimately has to kind of come in and review documents in addition to the forgiveness application and those prior to kind of slides with what you submitted to the bank with your forgiveness application. So this is where beyond those items, make sure that you've created kind of a vault, a documentation vault for things above and beyond what you're already submitting to the bank. I'm not going to read that out. I think y'all are all smart people. You figured out how to do a Zoom webinar today. And so, but let us know if you have any questions. I think this is coming directly from the application instructions. So just become familiar with this. If you've got some downtime right now, if you are staying home this Memorial Day weekend and watching it rain and not enjoying the fun that others possibly could be, go ahead and, take this one and start tackling it. I think this is just a little bit of a start, and it'll make obviously the forgiveness application a lot more streamlined on the end of it, and then give you a little more comfort that if SBA does come knocking within 6 years, that you've got a little bit of documentation. So, all right, Rachel, I'm going to take a break, and we can do another poll before we jump actually into the application itself. So let me launch that.
So we are curious to hear from you guys about, after hearing the latest updates and guidelines that were released. Again, that's the most current updates. Again, some of that has changed from what was originally released. Some of it's just more clarification on what was originally released, and it can continue to change. Obviously, DILLON CPA'S, Marcus is not writing those rules, so they would be a lot easier if he was. So just checking in with you guys, what % of forgiveness do you expect for your PPP loan? Are you thinking, expecting 100% forgiven, 50 to 99% forgiven, or expecting less than 50% forgiven? And really, I guess at that point, then you're kind of treating it as a great loan while you wait.
All right, Rachel, I'm going to go ahead and stop that and share results if you want to do those.
Yeah, so looks like a majority of us are expecting 100%, some of us somewhere between 50 and 99%. I think that's great. I think what that means is that you guys are really staying on top of the guidance that's coming out and educating yourselves and keeping great documentation as far as what's needed to do that loan forgiveness process.
All right, so 59%, close to 60% with 100% forgiveness. I'm going to put a disclaimer here. I'm not really that cool and have it scrolling at the bottom or anything, but if you do not achieve 100% forgiveness, you cannot kill the messenger. You cannot kill your CPA. You cannot kill your banker. You will go to jail on that. So I'm making all of y'all sign a pact, sign it in blood. If you do not get 100% forgiveness, it was because of you. You didn't follow our advice. No, I'm just so, but obviously 100% forgiveness is what we all want to achieve. I think even, even with where you're all at realistically, I think hopefully some of this guidance, if we are able to stay with paid and incurred, man, I hope that it does lead to 100%. We're still real leery. As we've seen, the rules to the game keep changing constantly. So, all right, I'm gonna stop that. We'll get back into it real quick. All right. All right, so like we said earlier, we're just gonna go real quick through the actual different parts of the application. So Schedule A, the worksheet, this is where you would start. This is where you're gonna eventually drop in all the employee data, their average FTE. So it's not, their actual calculation where you came up with the 1 or 0.5, but it actually is that end result on the FTE. Cash compensation. So that first table, that's for anybody that was less than $100,000 salary. So that also has to factor in if you reduce their wages during all of this. So that's one of the kind of check marks that if you reduce someone's wages below a certain amount, then you could limit your forgiveness. So all of that stuff goes into that top table for anyone under 100,000. We do believe that ADP has initially released kind of their, just like they did on the loan forgiveness application side or the loan application side, they have some really good reports. The same on the loan forgiveness side, they've kind of come up with some additional reports based on your funding date. And we know that those are going to change. I know that other payroll providers will come out as well. So that's the data that you're going to take from those ADP or payroll reports to kind of build out this Schedule A worksheet. There are guys a lot smarter than I am to kind of go over this in much more detail with you. And there's even a webinar at 2. I can send you an invite if you want to go to that one. That's what we'll be paying attention to. But as we get additional guidance, we feel that it's our job to kind of be the go-between. So you don't have to learn how to speak accountant, and we can kind of explain it to you a little bit better and how it relates to your situation. So Schedule A worksheet, that's what that one kind of looks like, and you can really dig in. If you are curious, you can go ahead and play with this, drop your own numbers in. We do not have resources as of today where it's a live document and populates and feeds into the different schedules or anything like that. It's really just still manual at this point. But if you're curious and you want to do something, go ahead and play with it and drop your numbers in. Schedule A itself. So we started with the worksheet, then we're able to feed into Schedule A. So following along here, you're going to pull data from the worksheet. I'm excited for when the banks actually drop all this into a very nice online worksheet that we can just plug the numbers into and not worry about calculations. But just as a matter of, hey, we've seen the application. This is what it currently looks like. This is Schedule A, which is still dealing with payroll only cost. And so, just go through the buckets with the documentation you've saved. And then this is the second one. So it gets into that FTE reduction calculation at the end. So all of this on the schedule then feeds into the actual application. So we'll spend a little bit more time about the actual application today. So that first part, that's just some general stuff. You should get, a pass if you can get half that stuff right. We hope that it'll be pre-populated with your online banking portal. So the PPP loan number, lender loan number, that's stuff that most folks don't even know. So we're hoping that maybe the banks will provide some of that whenever you go to eventually apply for forgiveness, and then the timeline to apply for forgiveness. I personally haven't seen that. Someone can maybe correct me on that as far as the timeline. I know that the banks have 60 days, I believe, from when you submit the application to kind of process it for forgiveness. And the bank that you applied with is the one that you're also going to apply for forgiveness with, even if they've sold the loan and no longer process it. So that's my understanding as of today. The main thing on this, you're gonna kind of fill it out as best you can. A lot of our clients are obviously going to have to do this on their own with us kind of helping them maybe prior to, or I don't even know if during, because this is all going to be live in their online portal. The main thing that I want to point out is that last question checkbox. If your loan is over $2 million, you do not want to select that bad boy. That's going to trigger something in the SBA program to where, hey, they're going to send you a nice letter. They're going to send you a nice agent to eventually look over your file. So do yourself a favor. If you're under a $2 million loan, do not check that. Like, just mentally block that out. So the other kind of things to think about are if you are a biweekly or weekly and you are electing into the alternative payroll covered period, then you would put the dates that you are electing that line up with your pay range after funding. So that's really critical to kind of maximize if you're a biweekly payroll person there. And then just kind of going through, so a lot of this is flowing from Schedule A directly, and but then you're also pulling in just raw numbers from your own calculations on the interest payments, on the rent and lease, on the utilities. What we would recommend is whatever you're putting in, just that's not a formula into this application. Have a lead sheet. In auditor speak, that just means like an Excel document or a Google Doc, which outlines all the expenses, the total, and then that's going to feed into that total is what we put on this page. So really, really crucial there that just everything lines up. We want the best documentation possible, because you may sacrifice your forgiveness just because of bad documentation. So keep in mind that, that's going to be your job as part of receiving this forgiveness, is just keeping really good documentation. So that's page 1. Page 2 is the certification. So this is the stuff that, you can either take it literal, you can take it, whatever you want. Maybe you need to hire an attorney to kind of walk you through some of these responses. And really, this is what could reflect negatively on you if you don't answer these in full confidence. We saw on the application side for the loan itself, we saw a safe harbor come out last week, which was great. If you were under a certain loan amount, that you did have the best of intention because you were applying for the loan, that you had no other access to capital or cash. So we don't know if they're going to do some other type of safe harbor on these questions. At this point, you just have to assume no. So just obviously answer these to the best of your ability, and then you won't go to jail for bank fraud. The one thing to point out is something that we are learning was how they're treating owner, officer, owner, employee compensation during the 8-week period. So if you see on that first question, that first certification, that last bullet point, your pay as an owner shareholder in the business, let's say you're an S corporation, you pay yourself on W-2, you cannot exceed what you paid yourself for 8 50-seconds of 2019's pay. And so the strategy was like, hey, I'm going to put my employees, leave them on unemployment as long as possible. I'm going to bump my payroll to $100,000 max, so I can take the full $15,385. Oh yeah, I only paid myself $60,000 last year. That's not going to matter. Well, it's going to matter. So I think they are taking whatever you paid yourself in 2019 and saying that's your benchmark as the owner officer. Like that's what you call. That was your decision prior to this. You cannot change your pay because of this 8 weeks of funding. So a little bit of a step back as far as planning. We'll figure something else out. Honestly, somebody much smarter than us will come alongside us and give us some recommendations. But right now, that looks like they've kind of knocked that down to say you can't just pay yourself all the money that should have gone to employees, which is the right call. So some smart guys in Washington or wherever they're coming up with this stuff. So moving along to the kind of second part of the certifications, really just like this is where they're going to catch you. If they want you to know how you're going to be held accountable if you make a false statement, if you include documentation that wasn't the most accurate or honest. This is the catch. This is the go to jail card, or at least get prosecuted card. You may not go to jail. But all kidding aside, I think this, we're going to help, kind of dissect this for you as additional FAQs, as an interim final rule, which is just a crazy play on words, comes out again on this forgiveness application. So, all right. So that's the application. Very quick to just kind of go through it as, kind of an initial drop. Came out on Friday. We'll do the second poll, and your eyes aren't playing tricks on you, Rachel, if you want to jump into this one.
So after the information Marcus just shared, wanted to see if there are any changes to your expectation as far as forgiveness goes. So same question as before, what % of forgiveness do you expect for your PPP loan? After that clarification, if you still expect the same amount, that's great. That means you're, still, again, keeping as current as you can, keeping good documentation, making, I would say, ethical or cautious decisions as far as staying within the guidelines and requirements. 50 to 99%, of course, there can be error changes, things like that, or less than 50%. Okay, so maybe a little bit of difference there as far as percentages of forgiveness expected.
Yeah, so we lost somebody. I think we went from 60% to 53. So I'm sorry, whatever I said, I guess maybe start paying attention and I scared you. I don't know. So I think it's my job to scare you into the worst case scenario. Yeah, so I'm going to stop those. And this next section, before we kind of wrap up and get into your Q&A, are really just to hit common questions that we've seen in the market from clients over the last week since the application came out and additional clarity came out. So I'm going to ask Rachel. Rachel, are you doing okay on Q&A and managing that? If you'll kind of help me with these and read them, we'll kind of dive in.
Yeah, actually, I wanted to do one before you start.
Okay.
Just a clarification on the 75% of funds being used towards payroll and 25% for the other allowable expenses. You did mention earlier 20% for non-payroll. Is there any clarity around the difference between those?
The 20% is whenever we originally were thinking, and we've done that calculation internally with how you were approved. You were approved for $250,000 using round numbers, 2.5 months of your salary. So given our initial kind of, thought that only 8 weeks, 2 months was going to be included in this, we knew that people had to have rent, utilities, other costs that were at least 20% for them to maximize full forgiveness. That was our internal calculation. I don't want to confuse anybody. So if I can retract that, I will. But it is your other costs cannot exceed 25% of your forgivable amount. So if you can only achieve 100,000 of payroll, the way that the formula works, you cannot exceed 25,000 of that on other cost. And I don't have the formulas in front of me, but I think that's kind of how it would work. Does that make sense, Rach?
Yeah.
Okay. It'll all be in a formula somewhere, and hopefully they make it a lot easier. But it is 25. It's a 75-25% rule.
And there's one more question, but we'll save it for the end,
okay.
And then just in case it's covered prior to that.
All right. So you want to jump into those common questions?
Sure. Yeah. So question, when does the 8-week period start and stop?
So this is what we talked about at the beginning. So there's two options. Well, two options if you're a biweekly or weekly payroll filer. So that covered period, that's option one. So that starts after you receive the funding and goes through your 8 weeks, your 56 days, however you want to look at that. And the big thing there is paid and incurred, as we understand it right now. So it could potentially be a little bit more payroll than we all thought at the beginning, because we have paid payroll, but then we also have incurred payroll. Incurred means the employee earned it on the day they worked. You just maybe have not paid that out yet, and you have beyond the 56 days to pay that out on the next pay date. So I think that's good. That's clarification. The second option there is the alternative period for biweekly and weekly payroll providers or pay periods, just to where you have some option where you can actually elect for your 8 week period, as far as payroll is concerned, to begin on your next pay range. So you got funded, let's say on a Friday, but that was the last day of that pay range. You can actually elect under that second one for that to start on your very next pay range, which is maybe the Monday or the Sunday. So, and that's really cool, because then you really maximize your pay, how much would be included within that 56, because it looks at both paid and incurred. So yeah, so really hopeful there on that question.
All right, next question. But what if my payroll doesn't line up exactly? My 56-day pay period ends on Saturday, June 20th, but I actually pay my people the following Monday.
Yeah, so this kind of goes back into that prorate. We're gonna have to prorate it to where if your 8 weeks ends on that Saturday, June 20th, they're actually going to allow you to include that pay date that happened after the 56. Let's say that your pay range actually goes beyond that 20th, maybe into the next following week. That's where you're going to have to prorate it and kind of cut it off, not change your pay cycle or how you pay folks, but just have like a calculation of what's really included on that incurred piece that is going to be paid after the 8 weeks. So hopefully that answers that one.
Yep. Next question. How much non-payroll cost can I claim and still be eligible for full forgiveness?
So this is where, I'm sorry, whoever I confused on the 20%, but that was the way my mind was working on that internal piece when we were still thinking way back when, before this drop. But anyway, so it's 25% is the magic number, that 75-25% rule. And so if you go back to the application, you'll actually see where that's referenced and where it's the higher of three amounts on one of the application pages, or the schedule. I think it's the actual page itself, to where they're not allowing you to use your non-payroll expenses or not forgive non-payroll expenses beyond that 25% of payroll to maximize loan forgiveness. Yeah, the main thing is to point out here is that your forgiveness amount and your loan amount aren't necessarily the same dollar amount. So.
All right, next question. What are eligible non-payroll costs?
So this is kind of where, just backing up again with what we had talked about earlier, non-payroll costs, and they're still calling them covered mortgage obligations. So this is interest paid on debt on real or personal property. It was incurred prior to February 15th, 2020. So that's what we see there. If you'll see my little kind of italics below that, we don't have a clear definition of what that really is. If it includes just real estate, if it includes other property. If you want to make your case, call your senator, call somebody, call Rubio, tweet it out, whatever. But I think they're still kind of clarifying this. We've got this question. Other CPAs across the country have this question. Senators, it will get clarified, hopefully before the forgiveness application really starts to kick off. So yeah, I think, but right now, all I would worry about, your primary concern needs to be payroll. because we know what that is. That's why you got the loan. Second, if you're going to include interest, it would need to be on real estate, is kind of the approach that we're taking right now. If we can open it up to non-real estate assets, then we will. But you're still going to be limited to that 25% total on non-payroll. And so it goes back to rent obligations. This is the other piece that we don't know about. It's like lease obligations on personal property. And this is where we talked about leasing vehicles, leasing equipment, that crappy copier you have sitting in the office. You know, is that included in this? We still need some definition on that. And then the other thing is the utilities. So on the utilities, electricity, gas, water, transportation with a huge asterisk, and then telephone or internet access. So transportation, as far as we see right now, only applies to Schedule C, self-employed, sole proprietors that don't have an entity set up where they file a separate tax return. You're not an S corporation, you're not a partnership, you're not a C corporation. That's the only thing that we see as far as transportation right now. There is some confusion there. Hopefully they will give guidance on it. But everything else is kind of clearly defined. If it's not on that list, it's probably not going to apply. So like workers' comp insurance, I don't see applying. Your GoDaddy for your website, probably not going to fit the definition. Now your Ring Central, your eFax, yeah, we may be able to slide that in. So I think all of that kind of goes into like, this is what we know as of today. It could all change tomorrow or get clarified. So hopefully that gives a little bit of clarity on that one piece, because it is coming up quite a bit.
Next question. Can I use PPP funds to buy a Rolex or Rolls Royce?
Yeah, I wish we had a different way. I wish we could push this through. I wouldn't even do a Rolls Royce. I'd probably do a Porsche Speedster if I had the call. That's probably going to go up in value versus the Rolls will go down and be a depreciating asset. But unfortunately, no. And this has already been case tested. You can see right there, if you watch the news, there's a reality TV star that went out and got $2 million plus PPP loan for his trucking company to keep people employed. And then he immediately took that money and had fun. So I think the Rolex presidential watch, the almost 6-carat diamond ring, the Rolls Royce, who doesn't love this guy? He at least tried, but I think he was arrested and prosecuted or will be prosecuted. So just be smart about it. I think there's some gray areas, but as we could see on those previous slides, I don't think this is included. So.
Next question. How much non-payroll costs can I claim and still be eligible for full forgiveness?
Yeah, so this question keeps coming up, right? 25%, and that's, where it's not necessarily the same as the loan amount.
All right. Do I have to pay the eligible non-payroll cost during the 56-day period?
No, so that's where it's paid or incurred. In the covered period, the covered period relates to payroll and non-payroll. You can only have the alternative covered period for payroll only. So the covered period, you could incur some rent, some utilities for that 56 weeks, but then pay that on your next bill. That's going to be included in the forgiveness as we see it today. So, the initial thoughts were, oh crap, I'm going to have to write this check or send it in early to get it in the 56 window. That's not the case. Like, we were hoping that wasn't the case. We still hope that's going to be the case. But that's what we see in this guidance.
What is the definition of an FTE?
So they came out, I know that somebody in the polls, like, what the crap is an FTE? So it's somebody that works 40 hours per week.
How do I calculate average?
So a few different ways. You can do the one where it's kind of like their simple calculation, where it's anybody that works up to 40, even over 40 is 1. That's their number. Anybody that is below 40, they could work 1 hour, they could work 39. That's going to be 0.5 in their simple calculation. The other option you have is to actually run the number over 40 and come up with an average FTE for each employee The great thing is whatever method you choose, the simple or the actual calculation based on your employees, you would keep that consistent for the base period and this covered period all the way up till June 30th. So if you've historically only had 8 FTEs, and then during all of this, you have 7.5, you're going to keep that same calculation. It's not going to be, I can use the simple calculation one way and the other. I think across the whole application, consistency is key. So once you've chosen a method, whether it's the FTE count or the alternative covered period for payroll cost, you have to maintain consistency across the whole application.
Another question, as an owner employee, can I increase my 2020 payroll to an annualized salary of $100,000 during the 8 weeks to achieve maximum $15,385 if I only paid myself $26,000 on W-2 last year?
Yeah, and so this was unfortunately news to us, where this planning strategy, they kind of said no. As it is today, we think that the SBA's guidance on this is pretty clear, that if you paid yourself 60 or 26,000 in this scenario, then you would only actually apply for 4,000 of the total forgiveness. So you'd be shy about 11,385 than what you thought you could do, because we were thinking, hey, you could probably bump your pay, justify it as the owner officer during this time. That's not the case, which it's fine. So, but the great thing is now you have other payroll costs that could potentially come in, because we have a bigger payroll period that we're dealing with than just the 56 days.
As an owner employee, can I increase my spouse's 2020 payroll or add them to payroll during the 8 weeks to achieve the maximum $15,385?
Yeah, while SBA hasn't come out and clarified this 100%, we are paying attention to other professionals, other very national leaders who lecture on this. And it is being mentioned that in community property states like Texas, whether or not you want to believe it, your spouse owns 50% of the business. So you cannot elect to then pay them the maximum if they're not allowing you to pay the maximum. So I know that's what some folks were thinking. I'll just add my husband or wife to payroll, and we'll use up the PPP funds that way. So no, unfortunately, that's not going to be the case as of right now. So that spouse, your previous wages were not included in that PPP loan base. And so the government's coming alongside and saying, no, you can't do that, to hurry up and use the funds for payroll. So, all right, last poll. All right, we're going to launch the last poll, and then we'll go into Q&A.
So with clarifications on what is allowed, what is not allowed, I know maybe some integrity or ethical questions kind of apply here to this application, and for the loan, and then as well as the forgiveness of the loan. So looking at that, are you going to jail? No, I have great documentation and have stayed within the requirements of application and use. I hope not, but there might be some gray areas, or yikes, I need to reconsider some things today.
All right, we're going to go ahead and end that.
All right, so that looks good. I think, if you're in the area of like, ooh, I'm not sure anymore, it's likely related to the new clarifications, the new guidelines, additional information that you've received that you may not have known about at the beginning. I think Marcus likes to say as well, like you can prove your case if you really had, if you had a need or you wanted to prove a need. During this time, every person has been impacted. So I know that there's definitely options there of how you used and why you used and things like that.
All right, so I think that's the end of the poll. If we want to go real quick before we jump into Q&A, Rach, if you want to kind of go over that.
Yeah, so for additional resources, so again, as we have been doing from the beginning, whatever resources that we have that we can share, we are sharing. So if there are things that we talked about today that you want more information on, if there are resources that we mentioned that you think would be helpful to you, feel free to reach out. You can email coach@dilloncpas.com. and we can send those resources to you there, or try to give clarification, answer questions, whatever it might be. And then our website is going to be the best place. It is staying as current as the information that we know. So what we know is there in that spot at DILLONCPAs.com. You'll see the big red banner at the top, and then can click on learn more to find out. Other resources that we are still following and recommending that you follow: SBA, the Department of Treasury, your HR resource, payroll, banker, attorney. Those are all great resources for you to reach out to as well. Obviously, we don't have all the answers, and so those are definitely people that can help guide you along as well.
All right.
So we do have some questions.
All right. I don't know that I'll have the answers, but
it's going to be rapid fire here.
Okay.
So out of 8 companies, only 1 received a loan of over 2 million, a PPP loan of over 2 million. All the companies have shared ownership. Will this be considered as affiliation? So the sum of all loans are higher than 2 million.
I would, based on the guidance that I've seen, I would say yes. So I think that you would definitely have to ask that question of your banker. I think that $2 million number is a big one. So I think, yeah.
What if you received an EIDL grant aside from a PPP loan? Is that forgivable as well, or does that count against the PPP loan?
So a few things that we didn't really cover here were the EIDL. If you go back through the actual application, EIDL, separate program, still administered by the SBA. If you received an initial grant from the EIDL, the way that starts a process of receiving potentially a loan, an EIDL loan. If they don't ever follow up or say that you're denied for the loan, that does become kind of a grant, if you will. It's not taxable to you, but in the PPP forgiveness calculation, you have to reduce your PPP forgiveness by the amount of EIDL you received. So if you were one of those folks that said, I'm going to get 100% forgiveness on your loan, but you did receive an EIDL, you're not going to receive 100% forgiveness. You're going to have to back off your EIDL, the amount that you received as an advance on your PPP loan forgiveness, as part of that calculation.
Next question. The recent HEROES Act proposed an extension from 8 weeks to 26 weeks. Obviously, this would change the approach as to how we use funds for payroll. How likely do you think that 8-week extension is?
Yeah, the HEROES Act's dead on arrival. That's my thought on it. Like $3 trillion, they're crazy. So I think HEROES Act's kind of not going to happen. And that's kind of been our approach to, until it passes, until it's signed into law, we really don't want to bog our mind down because this PPP crap's changing daily anyway. So HEROES is a very long shot. If it changes, I'll buy you a beer.
All right, and this one may have been covered. We got it a few minutes. We got it earlier during the presentation, but we'll just quickly hit it again. If I receive funds on April 22nd in the middle of a twice a month payroll period of April 16th through the 30th, the pay date was actually May 5th. My next payroll period following starts on May 1st through the 15th. Do I understand that I can take full benefit of the May 5th payroll payment and start date of May 1st for the next 56 days?
So to clarify, the way that we read it right now is paid and incurred. So your first payroll date, which included a pay range prior to funding, would be included in forgiveness the way we understand it. The next few payroll cycles are, that one's easy. They're incurred and paid. And then your final payroll cycle, which will probably be cut off, be paid after the 8 weeks ends. Those days that the pay was incurred but not yet paid out would also be included in the forgiveness. So that's good news as far as we're concerned, because that's way better than what we were originally thinking. To answer that question.
So potentially the last payroll would need to be prorated for the forgiveness amount.
And they still may come out and clarify. If you think about it, if you're a monthly payroll provider or payroll payer or whatever, and it just fell to where, hey, my first pay date, which covered the whole month of April, like cha-ching, man, I got that in there, and then I got 2 more, and then a prorate on. We'll see. But the way that we read it right now is paid date, paid was incurred. It was paid, and then incurred is the pay range. So way more beneficial than what we were thinking as far as just 8 weeks or 56 days originally.
Okay. And then a question on the FTE. So if 2 employees were paid for 30 hours, can that be made up? Like, how can you make up for this since it wasn't the 40-hour requirement?
So FTE is completely different than how you pay employees. So FTE, the definition for SBA is 40 hours. And so you can that's the FTE side. You then have a pay reduction, which in your case was 75%. So you did a pay reduction of 25%. That has to be factored into that calculation. And you can make up for it because it looks at the aggregate over the paid and incurred. So over that 8-week time, it looks at the aggregate up to $15,385. So if you want to recover some of those wages, but just know that FTE 40 hours is completely different than a pay reduction.
And do you want to just talk real briefly about not making changes to how you are making as few changes as possible to how you actually do payroll regarding having PPP funds and the way it should be looked at and used?
Yeah, they're going to look back at historical data. You don't want to change your pay cycle, your pay date during this period. We've had some new clients on board and we've just told them we're not changing anything. We're not even changing your payroll provider during this time, just because we want to be able to pull data as easily as possible. So if you're thinking about jumping ship from ADP to Paychex, or you're like, don't do it until you are past your whole forgiveness, because you just don't want to lose any of that data. Our ADP and Paychex rep are going to hate me for saying that, but you just don't want to lose it potentially. So that's the main piece. Don't change just because you've received these funds. Don't change the way you do business. We've had folks that, just pay my team the maximum allowed under PPP. Well, the maximum allowed is $15,385. Are you really going to take this person who would have paid, $4,000 over this 8 weeks up to that? It's just not smart business. So I think just run your business like you normally would. Yeah, we're in a crisis, we're in a pandemic, but talk with your advisor, talk with your financial team, whoever that could be, about the best plan for you. And that's going to be different for every business and every business owner. Kind of like Rachel said, we do have limited availability as far as our all-inclusive offerings that include financial coaching. Just reach out to that email address if you do have a question about that. We're happy to help.
All right, and last question, what about employee bonuses to make up the difference? Are there any restrictions on amounts?
Yeah, employee bonuses. So one of the guys we're following on the national level, we believe that bonuses are going to be fine if they stick to an aggregate. The only problem, and it may be a very small sliver of angst that we're running into, is if the SBA or the bank want to break it down by week and look at the you know, 1,000 and change that any one person can make per week over the 8 weeks, like that's the only part that a bonus may come back to hurt you if you like bonus somebody out. And then bonuses also need to be historical, like shown as we've historically always paid these out this time of year. It all kind of has to make sense if you're called out on it by your banker, by the SBA. So bonuses potentially could be factored in, but keep in mind that maximum amount, that 15,385, and then also that you've historically paid out bonuses.
Okay, and I think that that's the final questions
Awesome.
that haven't been addressed already.
You're staying up to date on the chat. You saw that.
I believe it was. So when is the due date to submit the forgiveness application? I think you already mentioned we don't have an exact timeline.
So, and I was listening to a webinar prior to this. You know, these are not tax rules; these are banking rules, and so that kind of stuck with me. Like, we're dealing with banking rules at this point. SBA kind of in their regulatory authority and banks. So that due date, I would tap your banker for that question. So,
okay.
But yeah, I think we're still learning more. Thanks for tuning in. We're going to continue to update you as possible. If you have any additional questions, definitely send those over to Rachel. One last one that came in, the 15,385. That's the magic number. That's going to be burned in my mind forever. That's the $100,000 annual equivalent over the 8 weeks. So no one employee can be paid over 15,385 and be anything above that for forgiveness calculation. So, but like I said, we're going to be paying attention to this. If you have questions about, need resources, need help, coach@DILLON CPAs is your best email. We'll follow up appropriately, but until next time, thanks again for joining us. I hope everyone has a great Memorial Day weekend. I'm sorry for those couple of folks that are going to be spending it reading up on PPP. Hopefully you can get out now. Maybe go watch another webinar. It'll be a lot better than this one. But until next time, we appreciate y'all. Let us know how we can help, and take care.